Hello, everyone. This is the presentation for our group's investment portfolio. And in this presentation, we will have 6 parts included. The first part is executive summary and introduction. So this project is to demonstrate the technicality of how our group first evaluated and chose 10 stocks listed on Ho Chi Minh City Stock Exchange. Second, chose and allocated the given fund of 1 billion VND to invest in 5 stocks. So after analysis, 10 stocks that were chosen for our watch list is FPT, KDH, VCB, PNJ, VNM, VIC, SSI, HPG, FLC, MSN, and the 5 stocks that were chosen for our portfolio is FPT, VCB, VIC, PNJ, and KDH. Further analysis will be discussed in the next part.
So the second part, we will talk about a business overview and some highlights about return and risk of 10 stocks from 2016 to 2021. First is about Candy High Trading and Investment, GSC. It was founded in 2001 as a private business and officially listed on HOSE since 2010 at KDH. And Candy is well known for its research and professionalism in the real estate sector. And after 20 years of growth, KDS focused on 4 main segments with 26 subsidiaries. And KDS is included in our group watchlist because of its transparency in legislative procedure. And also KDS has a stable business outlook in spite of property sector headwind. And KDS and next slide, please. And KDS annual return and standard deviation respectively is 31.59% and 27.25%, means that if investor purchase share at 200 million during that time, he would receive 263.18 million on the average after a year and would be exposed to the risk that the expected return rate vary from 31.59% by 27.25%. And in addition, the beta coefficient of KDS is 0.69, less than the average rate, indicating that there is slightly less volatility in the market. And this can be explained by the first reason is steady earning outlook over the last few years. The second is the long-term growth potential with the taxi land bank in its marketplace. For the peer comparison, KDS project return is quite low on average, but have the lowest stock depreciation on the list, leading to the smaller risk for investor. Next slide, please. The second stock include Vin Group joint stock company, which was founded in 1993 in Ukraine and officially listed on the HOSE since 2007. And Vin Group started in Vietnam with 2 key brands, this is Vincom and Vinpearl. Then both were merged to form the group in 2012. And now VIC has constantly developed and operated in its core business segment. And we decided to choose VIC due to its impact and multiple positive catalysts. VIC is shaping the technology driven in management and operation because VIC is committed to applying technology in all of its business sectors. And we can refer to Vinhome online platform that ensure on schedule delivery and good sales recognition that keep performing resilient as with COVID-19 resurgence. And VIC has accumulated an average annual return of 24.17% from 2016 to 2021, which means that on average, an investor would get approximated to 148.34 million after a year if he yield 200 million to purchase share of VIC. And also the annual standard deviation of VIC is 28.75% during that period, indicating that the annual rate of return would fluctuate by 28.75% per year on average. And annual return rate is lower than the average return as well as KDS or FSC. However, with that rate of standard deviation along with the beta coefficient at 0.93, VIC illustrates a slightly healthier volatility than what's on average. And for the peer comparison with all the rivals in the real estate sector, so this is a core business of VSC, and so that its annual return is not comparable with DSG and OGC, but outperform HBC and VNE. And VSC have a lower starting person, indicating a lower level of volatility over time. And the third stock, we will talk about FLC Group, which was established from the merger of member company in 2010 and officially listed on SNX since 2011. In more than 10 years of development, FLC has its scope of business including real estate, aviation, high-tech, agricultural, finance, and pharmaceutical. And our group through FLC Group because FLC owns a series of golf and resort complexes, and also Bamboo Airways, which were FLC Aviation, were labeled the most intriguing airline startup in 2020. Next slide, please. And FLC annual return is 29.63%, that ranked the fifth highest in annual return, but 47.45% of standard deviation is the highest one, along with the rate of beta coefficient of 0.98, higher than the average, indicating less sensitive in volatility compared to other rivals in the watchlist. And this can be explained that a variety of FLC five-star hotels were launched during that period from 2016 to 2021, which serve as a main source of revenue and profit recognition for FLC Group. The second reason is that Bamboo Airways were ready to back after the pandemic season, despite much difficulty at first, and FLC Aviation have planned to expand their routes both domestically and internationally. The third reason we can talk that FLC bear the risk of quick raising capital when a firm decides to increase its capital quickly and intensely while business outlook did not grow as expected, and particularly capital increasing 3 trillion Vietnam dong in 2019. And for B comparison, it showed that FLC ranked third regarding average yearly return and second in regarding healthy volatility in period 2016 to 2021.
Okay, next we will talk about Vietnamese Daily Product Joint Stock Company. It was founded in 1976, common known as Vinamilk. It was officially listed on Ho Chi Minh City Stock Exchange in 2006 with a ticket symbols as V and M. So its core business is manufacturing and trading milk and dairy products, as well as related machinery and equipment in Vietnam. The reason why we choose Vinamilk is, first, Vinamilk is not only the leading nutrition company in Vietnam, but also established a solid positions as its ranking 36 in the top 15 dairy company with the highest revenue in the world. Secondly, it has an impressive business performance. Despite the impact of COVID-19, Vinamilk still achieved a high profit target as it increased 5.9% over the same period, which is up 6 rates on the world dairy industry revenue map. Moreover, its share price remained high and saw a sign of increasing again. As a result, in the trading sessions on August 18, VNN increased 700 points, bringing VNN to 19,000 Vietnam dongs per share. So in terms of yearly average return, Vietnamese had the lowest figure on the watch list, which were 2.66% success that a receipt of 205.33 million Vietnam dong will be collected from an investment of 200 millions. So meanwhile, Vinamilk annual standard deviations was 24.14%. It were also the lowest values. It means that its rate is predictable and maybe it will be a potential investment on the low risk investment. So its beta coefficients at 0.75 and will illustrate a slightly lower volatilities compared to the watchlist average. For peer comparison, Vietnamese has no competitor on Ho Chi Minh City's stock exchange in dairy products. However, it has indirect competitors which were and XN in SAB. Overall, the company risk and returns had insignificant performance compared to MSN, but it's were quite outperformance compared to SAB. Next, we will talk about Hòa Phát Group. Hòa Phát Group were established in 1992 and it had a stock code which is XBG. It was legally listed on the stock exchange since November 2007. So its core business is manufacture steel product and do some business which is furniture, refrigerations, real estate in agriculture. So Hòa Phát is chosen due to many reasons. First is it has a unique competitive advantage in proving a dominance in steel segment. Also, there is a good prospect for Hòa Phát and Vietnamese steel industry because steel demand is broadcasting to increase steadily over the next 5 years as Vietnamese direct competitor has shut down due to the impact of COVID-19. Moreover, revenue of Hòa Phát has increased over the past 8 years. It's a guarantee of promising success over the next few years. Last but not least, is about its share price. Its share price is continual increase despite the COVID-19 pandemic, thanks to its profit in growing market shares, which is reaching 115% increase and has shown no signs of stopping. Talk about the yearly average returns. XBG is one of the 3 stocks which having a highest figure on our watch list. Its returns is 34.41%, which is implying that if investor use 200 million Vietnam dong to buy shares of XBGs, a risk reserve of 268.82 million will be collected. Continue with its standard deviation. So its standard deviations had the high values at 32.91%. If implying that the expected annual average return deviated by 32.91% from the annual average returns. So according to its return in risk, XBG will be demonstrated at the high risk and high return stock. Moreover, compared to other stock on our watch list, with the beta coefficient 0.6, XBG is nearly the lowest volatilities on our watch list average. For more comparisons, we are linked to leading companies in steel industry, which are NKG and XSGs. So Hòa Phát average annual returns has outperformance because it has a double values comparing to both competitors. However, its standard deviations has a higher risk comparing to the 2 competitors.
About the equity group. Equity Group established on September 15 in 1988 and operated in 3 core business areas: technologies, telecommunications, and education. Equity shares were officially listed on the Ho Chi Minh City Stock Exchange, marking the first event that an enterprise in the field of IT and telecommunications became a public company on December 13, 2006, and the ticker symbol FBT. The reason why we choose the stock is that despite the COVID-19, FBT still maintained a positive growth rate in 2012 amid the global economic downturn in the Vietnamese market. FBT affirmed its positions as a strategic partner of top 15 leader enterprise in Vietnam in national digital transformation in various fields, such as banking and finance, manufacturing, real estate, etc. And FBT surpassed hundreds of well-known IT companies to become a priority partner in projects of many customers. Next slide, please. about the annual return rate on equity is 13.56% through 2016 to 2021, indicate a yield of 267.12 million if an investor puts 200 million in stocks, and the risk during that period is 25.94%, indicating that an investor invested in equity could be exposed to a risk of the expected return fluctuating between 25.94% and 23.66% per year. And equity's risk is the lowest comparing to competitors, RSF, Alcom, FTD, and CMC Group. Next slide, please. Next is the SSI Security Corporations. The company was established in the December 1999 and is one of the oldest operating companies in Vietnam stock market. And SSI was registered for trading at Hà Nội Stock Exchange in December 96, but in October 27, SSI was officially listed on Ho Chi Minh Stock Exchange. About the core business of SSI. SSI operating in a wide range of finance services, include security service for individual and institutional clients, investment fund management service, investment banking, etc. About the reason we choose this because the innovations and creation of product and service in order to provide the best and most competitive service to customer is evident when the company has had 5 consecutive years leading the stock brokerage market share and fund certificates on HOSE, and SSI recorded consolidated revenue of 4,000 billion, up to 38.5% compared to the previous year revenue, reaching the 166% of the business plan. Next slide, please. About the average yearly return of SSI from 2016 to 2021 was calculated at 35.28%, which resulting in a yield of 270.56 million from an investment of 200 million. On the other hand, SSI has a 37.32% annual standard deviation during the same period, imply that an investor who bought in SSI between 2016 and 2021 would have to deal with a risk of 37.2% variance from the 35.28% return noted above. And a comparison was made between the SSI and other Vietnamese stock exchanges at HEM or IGR that show the firm's risk-reward game has a negligible and non-restrictive performance. Next slide, please. The Phú Nhuận Jewelry JSC, or we can, or in short is PNG, was founded on April 28 in 1988 and officially traded in the first session at the HOSE. The stock code is PNG on March 23, 2009, and PNG is the leading brand in Vietnam in the field of manufacturing and retailing gold, silver, and precious stone. The reason why we choose this because PNG products are increasingly popular in Asian and European markets. For 6 consecutive years, PNG has been honored in the top 10 of 100 sustainable enterprise. Another reason that despite the COVID-19 pandemic, P&G has excellent surpassed the storm, steadily grow to become the best enterprise in the jewelry industry in Asia Pacific, continue to be the one of the most attractive working environment in Vietnam today, and at the same time is a pioneer and typical enterprise of the Asian region. Next slide, please. From 2016 to 2021, the average annual return on P&G was 23.95%, which suggests that a receipt of 247.9 million will be collected from an investment of 200 million, which is 20% of 1 billion. Meanwhile, P&G's yearly risk during the same time period is 31.68%. And in the jewelry industry, P&G has no rival on the stock exchange to compare.
The next stock that was included in our watch list is BCB, which is Commercial Bank for Foreign Trade of Vietnam, commonly known as Vietcombank. It was established in 1963 and officially listed on Ho Chi Minh City Stock Exchange since 2009. Its core business as a mass market commercial bank provides financial services for households and corporates. The reasons why we chose this stock to be included in our watch list is because first, based on a global viewpoint, according to the review of corporate finance studies, it is stated that the banking sector was projected to play a key role in handling the economic shock caused by COVID-19. However, secondly, a national viewpoint based on Journal of Applied Finance and Banking stated that the role of banking system in contributing to the Vietnamese economic growth has proved to be modest in the period from 1990 and 2010. So based on those two reasons, we want to check the current situation of the banking sector and Vietcombank. So after calculation, the return and risk recorded at 20.3% of return and 29.12% of risk, indicating that if we invest 200 million into this stock, we will have a return at roughly 240 million. And also that return can be fluctuated by 29.12%. And its beta coefficient was recorded at 1.18, which is quite high in our watch list. This is the chart of peer comparison between BCB, BID, and CTG. As you can see here, the return and risk of the return of Vietcombank is lower than those two, but the risk is quite similar. In contrast to this, as you can see from the last slide, the price movement of Vietcombank is steady and stable. Next slide, please. Last but not least, the final stock that we included in our watch list is MSN, which is Masan Group Corporation. It was established in 1996 and officially listed on Ho Chi Minh City Stock Exchange since 2009. Its core business focuses on consumer goods and natural resources. The reasons why we chose this stock is because first, it has a certain position in different industries due to its established diversity. Like its subsidiaries include Masan Consumer in food and beverage, Vietcombank for financial services, and Masan Resources for mining. And second, is exclusively for Masan Consumer only that the food and beverage sector is having great potential in the Vietnam market. As you can see in the chart from the right, that Masan Consumer just ranked first in the list of top food and beverage companies in Vietnam in 2021. After calculation, we recorded its return and risk as 28.56% and 33.17%, meaning an investment of 200 million can make a yield at roughly 257 million. And that return can be fluctuated by 33.17%. And its beta coefficient is 0.95%. For its peer comparison based on its diversity, there are so many competitors of MSN on different industries. And in this, we chose the food and beverage industry. specifically the beverage, including VNM and SAB, which is Vinamilk and Saigon beer alcohol. So as you can see here, the return of MSN is actually really high compared to the others, given the risk very low.
Okay, so next we continue with the market portfolio analysis. And in this, we use holes to present for the Vietnam stock market and the VN index for the price. So begin with the return, the annual average return indicator for the Vietnam stock market, 59% in the period of the 5 year from 2017 and 2021. And in this period, the AAR witnesses two different trends, which just went up from half 2019 and reached the peak in the 2021. So in a general look, it proved a good signal for the growth of the Vietnam stock market, and in recent year, and with a strict increase in the return for the investors, and still forecast for the future growth. Moreover, the daily turnover has also continuously recorded new peak since the May of 2020. So next, so there has been many events account for the changes, including the social, the economic, the political events. So look at the summary of the key event affected VN Index in 2020 to the June of 2021. Most factors come from the COVID-19 pandemic situation and the noticeable event like the government issues decree which extended time limits for the paying value added taxation, corporate tax, and personal income tax, and property rental in 2021. So next, when analyzing the risk, we can see that the annual average standard deviation opposed in the mentioned 5-year periods is 22.25%, and the figure calculated in the December of 2021 is 21.32%, which witnessed a dramatic increase in the 2019, and is it reasonably associated with the growth of the return based on the philosophy that the high risk, high return, low risk, low returns. So comparing to other market and that of and those of our watch list, the figure is still lower. So we can conclude that there is still a safe area for the investor and with an acceptable risk. So there also might be some risks to be taken into consideration. That is first, that is the side of moving higher of inflation indicator through its, although it's stable, and this will affect more on the stock market due to the change in the cash flows and the investment motivation of investor. So, and the second risk we must think about is that the effect of the COVID-19 pandemic and the possibility of the outbreak risk, with the COVID-19 is causing a countrywide outbreak, and the time required to limit the epidemics is an important risk element to watch. And the longer it takes, the greater the economic damage. So the market consensus predict the stronger growth in the period of 2021 and 2023. So the stock price rose as a high risk as a result of set a bullish attitude, and with the symptoms of euphoria mirrored in the retail investor activities. So next we will go to the portfolio analysis.
Well, my part is about the group's portfolio analysis. And after plotting the efficient frontier, we discovered that 3 stocks, FPT, VIC, and PNT, are already on the line. And to obtain 2 more, we choose the candidate which is the closest to the efficient frontier and primarily located at the top left of the blocking table, as this is the area that concentrates stocks with high return and low risk. Finally, we picked VCB because this has the rational risk and average annual return. And even though the risk is slightly greater than the return, it was the most optimum selection among the other unchosen stocks. And our group
has created a well-diversified portfolio. We use a risk reduction strategy that involves spreading our investment across a number of fast-moving, sustainable industries, including banking, jewelry, real estate, and technology. And within the chosen industries, we choose the one that stands out the most and include it in our portfolio. As a result, the group portfolio annual average return is 27.12%. Our group portfolio outperformed the market with an appealing average annual return that is 1.8 times the annual average return of the VN index and higher than the annual average return of 3 out of 5 stocks in the portfolio. And this indicates that if 1 billion was invested in our selected portfolio with equal distribution for each of 5 stocks, that would be 271,200,000 BND for the return. Our portfolio risk is much lower than the weighted average of risk on the individual investments, and the group portfolio is 20% less volatile than the VN index. With the systematic risk of 0.8, it is predicted to return 80% of the market return. It might be suggested that by using this portfolio, the group will be exposed to less systematic risk than the market, and this also meets the group purpose of having a healthy and unrisky portfolio. And next, my friend will present to you about the stock weight analysis.
And now we go to our stock analysis. As my teammate explained to you, if we continue invest equally 20% per stock, we will get a high risk, approximately 0.8 at 0.8, and the annual average return at 27.12%. And with the help of solvers, we can decrease it from 3.29% to 3.07% respect to the variance, or we can say that a decrease from 18.13% to 17.53% for standard deviation. And moreover, next slide. Moreover, by the changing percent in investing, we can increase our annual average return to 28.72% and decrease the risk to 0.72. And our result for each stock is Vietcombank is 16.9%, Vingroup is 18.8%, and PNG 7.42%, and FPT 33.45%. And finally is Candy House 23.43%. And I will show you how to do it in the Excel. And now I will show you how to use the Excel solver to solve the percentage per stock optimally. And first we will choose the whole table here, and we use data and data analysis, and we choose the covariance and click OK. We will group it by column, and we will put the output in the new worksheet, and we will have the solution right here. And okay, then we will change. We'll change a little bit. I copy it, and we pass spectral. We will choose the values, and we transpose it to take the data of the plane here. And when we have this one, okay, and we will fill the whole thing here. I use a little bit formula. If P2 is blank, then I put the P2, or otherwise we put the P2 here. Okay, and then we will spread it for the whole thing. Okay, that's it. And then we will invest. Initially, we will invest 20% per stock, and Okay, this one and equal to 1, and we need the portfolio variance. We calculate a little bit function transpose. We transpose this one and move this one and this one. We would need to multiply it by 250 for the annually reached. Okay, and then we click Control Shift Enter. We cut the portfolio variance, and then we will use the solver to solve it. We set the objective is the variance, and we want to minimize the portfolio variance, and we change in percentage in investing. Okay, now we'll set the subject to the constraint. First, we want it below 1, and we will also want it higher than 0. Okay, and the last one is the sum of it will equal to 1. Okay, and now we solve. Yeah, and now we will have the percentage change in each stock that will optimize our money for the investor. And yeah, that is the end of our presentation. And thank you for listening. Bye.